I'm Chimwemwe Mangazi with Business Time on Times. It is a magazine program where we bring you business and economic news stories making headlines. In the program today, import cover below 1 month. We have an interview with the Reserve Bank of Malawi Governor Wilson Banda. Also in the program, National Planning Commission update on achieving Malawi 2063 first implementation plan. We have these and other stories. Stay tuned. Hello and welcome. Governor of the Reserve Bank of Malawi, Wilson Banda, has indicated that the country's import cover remains below 1 month. He has attributed the development to a high fuel importation bill. I caught up with Banda to explain the situation. He begins by explaining the idea of a 5% inflation target for the medium term.
No. In terms of inflation targeting, we have to have a target that is ambitious. We want to say the economy over the medium term is aiming for 5%. That is our medium term target, 5%. In the short term, we'll have all these problems. We have exogenous shocks coming from the weather. Currently, our inflation is still largely driven from the supply side. Maize is still driving it. If you recall, our inflation basket is made up of food and non-food. Non-food is going down, is stable or going down, and that is literally controlled by our policy rate. Our policy rate is effective, that's why it's keeping it down and it's going down. That is good. The other component is the food component, over which we've got very little influence. That is production of maize. Maize availability in Lilongwe, in Blantyre, etc., is something that we as authorities cannot control. And the supply and demand of that maize basically determines the price. The situation in Malawi is made worse by the fact that in the region there's no maize. Zambia, you talk of Zimbabwe, you talk of some parts of Mozambique, they all come to buy their maize from Malawi, and that is pushing the price of maize up. So that is actually building into inflation. Can we do something about it? No, we can't do anything about it. That's the supply side kind of shock. But definitely on the non-food side, yes. Well, there are certain things that are beyond their control. If you are talking of climate-related issues, I think the intervention goes beyond Malawi. But in the short term, the initiative on mega farms, for example, is an intervention that is going to increase the supply of maize in the domestic economy. You know for a fact that some of the mega farms that we have in the country produce quite a lot of maize, and that is helping to moderate the increase in price of maize. Were it not for those farms, probably the price of maize would be a lot higher than what we are seeing today. So Minister of Agriculture is supporting those initiatives going into mega farms, using irrigation to basically deal with issues of shortages of rain and the like. That is the type of intervention that we expect from Minister of Agriculture, and I think that will be a good job. No, on the sense that I think we continuously say this. We're at the tail end of the tobacco marketing season. If you notice, tobacco prices this year have been a lot better than in the previous years. The volumes were higher. In terms of the quantum of foreign currency that has come from the market is definitely better than last year and the year before. We've received quite a bit of FX from donors, the World Bank, and donors is concerned, it's good. In terms of the formal sector, tobacco has been a little more kwacha by pushing the exchange rate to a certain level. Then you find that there's panic in the market. People go for those higher prices of FX and the like, and that feeds into the black market rates and the like. So for us in the central bank, we look at the recent widening gap between the official rate and the black market rate, has largely been driven by speculation more than anything else. We don't think there is justification really to support that. Our import cover is currently about slightly under a month. It's been under a month for a long, long time. We thought we would come out of it by the end of this quarter, but what has happened is that the bill for fuel has been excessively high. Our fuel bill is well over 15 million a month. And if you look at how much we are getting out of tobacco and compare that with the fuel bill, the amount that is coming out of tobacco is about 400 million this year. Divide that by 50 is something like what? 15 to 400 is about 8 months. It's about 8. That is not a lot. But then there are other requirements. So when you look at the fuel bill, you look at debt service, you look at requirements for pharmaceuticals, you look at in the coming months we'll be importing fertilizer. All that is having a drain on our import cover. So our import cover, looking at it from the central bank perspective, has remained fairly flat. But what we don't talk about is the import cover that is on the other side, which is the commercial banks. As you know, we have liberalized our foreign currency the holding. So commercial banks are holding most of this foreign currency coming from the private sector. Their FCDA levels have since risen quite sharply over the past couple of months. That is offsetting what the central bank is losing out. So if you are looking at national level, our import cover is well over 2 months, close to 3 months. No, we can't. As a country, if you go to zero, then the country collapses. No, we can't get there. We can borrow. We can do all sorts of things in order to beef it up. We've just been careful not to increase the country's external debt by borrowing. We've just basically kept using what we have. In the past, previous administrations, they borrowed quite heavy in order to boost their foreign currency reserves. The after effect of that is that the current generation is having to pay those debts. That's exactly what we're trying to avoid. But in the event that we're really pushed into a corner and the country needs the FX, we will have no choice but to go out and borrow.
The National Planning Commission (NPC) remains hopeful that aspirations in the Malawi 2063 first 10-year implementation plan are attainable amid current economic challenges. This comes as the Commission reported a 43% progress in the rollout of the plan in its 2023-2024 progress report. The report shows that at the current fragile trend of economic growth, Malawi will reach middle income status by 2045. NPC Director General is Thomas Muntari.
And this is all dependent on the efforts that we put up, especially in concerted efforts, both state and non-state actors. Because we've done it before. What it requires us to still meet the middle income economy by 2030 is no growth rates that would be more incremental than what we're having now, 6 to 10%. Have we done it before? Yes, we have. So the issue is about focusing on certain sectors that can help us accelerate that. And we are grateful to the leadership that has really recognized that if we are to do that, the agriculture, tourism and mining will be key sectors, and we have added, to the leadership another M, the manufacturing. The whole point being that if we focus on the ATM and M, we are assured that investments in those areas can catapult, especially the mining area. And we're excited that there are 2 mining development agreements that have been signed last Friday, which is sending a signal that Malawi is open for mining business. If we can have those rolling out, including in other additionals, then we are likely to hit that target very soon. So if you ask me, yes, and what now is required is for us to put all our efforts in terms of resources, technical and financial, to those sectors that we've singled out, the ATM and M. and hold each other accountable to make sure that whatever resources we're putting in there are really put to good use. I think that's why I was saying that first, if you look at the background, we have been hit so much with exogenous shocks, COVID, then cyclones, and everything else that has prevented us from moving forward. But I think the realization, if we are moving forward, is that we need to learn from the past. In the past, we focused on a lot of the social sectors. These are important sectors, but they don't generate money. And the fact that government has now put more emphasis on the ATM and in the other M now gives us confidence. And I think if you're looking at it, the fact that we have 2 mining development agreements already, you will recall that the time when Kairekera was up and running, mining contribution moved from 1% to 10%, and you're talking of just one mining. And so imagine that we're now talking about 3 MDAs that have already been signed, because there's also Niobium that has been signed. Now add to that the commercialization in agriculture in terms of the mega farming that is coming on stream. You are talking about the industrial parks that are coming on stream. If we add all those things, including the rail system that is now even ferrying stuff all the way to Lilongwe, including fuel, and the transport networks that are being revamped, I think we're on the right track. What we are promoting a lot more is the acceleration, because the way we are moving at the moment, the progress is slow. If you looked at the current, most recent report of how we are moving on the first 10-year implementation plan, we are only around 44%. Of course, we've made progress. We are 20% in the last period. Now we're at 44%, but we are supposed to be at 100%, at least of the period that we have done now. So if we can only accelerate those efforts, and that is not just about government alone, it is about the development partners, the private sector. That's why we're in town here to engage some of the key private sector partners like Ilovo, the Press Corporation, the financial institutions. The idea is for us to meet those targets, we will require exponential investments, not incremental investments. So the point here is clear that if we are going to develop much faster, we have to make sure that our asset base is good enough. And asset base is developed through the development budget. So our ICT, our roads network, our transport networks in general, our energy, and all the infrastructure about education, health, and all that. If you're going to put a lot more monies into consumption, it means you have to continuously consume the next year and the other year. And you cannot finance more consumption if you've not developed assets on which to draw resources to finance the consumption areas. And that is why over the years you've seen that we have kept on borrowing and begging because we don't have another source. So the point we're making is the development budget is our way of moving away from consumption to creating assets that can generate wealth. The challenge has been, though, that these sometimes have not been followed through with making sure that what has been put in the national budget translates into the development budget. And so come at the time of reviewing in Parliament, because the monies are still intact, Parliament has to approve that those resources are shifted towards consumption, because otherwise they will not be spent. And I think that's a challenge that we're saying, look, I think the Treasury and I think us as National Planning Commission, we need to hold hands to be able to follow through with the ministries, department and agencies to say, right from the time when the budget has been passed, are they putting the money to the use that has been put in the budget framework? So that then the quality of expenditure talks to what the authorities have decided that the money should be used for. Otherwise, we end up having a budget framework, but then the reality in terms of implementation of the budget is something else. And at the end of the day, we'll be moving in circles of consumption and consumption, because what was in development was just on paper. It is very important for the reason that if you look at the central pillar in the Malawi 2063 is industrialization. Now, the moment you neglect that pillar and you say we're stopping at the agriculture, tourism and mining, you are sending a signal to everybody else in terms of investors and development partners that these are the areas that you want us to focus our attention a lot more. And yet, decent jobs and including the fact that you can quickly move to a middle-income economy will require you to go into a lot more of manufacturing. In actual fact, already, the government and I think the leadership has already made it clear that industrialization is key. And I can give you 2 examples. One is that now we have industrial parks. We have a special economic zone law that has been passed, and the president was very quick to sign off on these things because he realizes that we had companies, a lot of them in Malawi, that closed off, and we need to revamp them. The fact that the leadership and Malawi government has decided to bring back the Malawi Development Corporation Holdings Limited to catalyze investments, including in the manufacturing sectors, is a key indicator that manufacturing is central. There is no country anywhere in the world that has developed moving its path to the middle income economy without a strong manufacturing base. So that's why the extra M is very, very key. So one of the things that we've done is that we've formed an alliance with the Presidential Delivery Unit, because we realize that if the two of us, because we as a commission have got implementation oversight as a mandate bestowed on us by law, but development is a political project. And therefore, the Presidential Delivery Unit that is looking at how to make sure that the presidential transformation agenda of wealth, jobs, and food security are sustained, all of them sitting within the first 10-year implementation plan, by the way, we can make a lot more traction. Because if it comes from his office, an office that was mandated by the people of Malawi, in the next years of office, we can make a lot of traction, and we've already seen that happening. So what we are doing now is to engage more bilaterally and work closely with the Presidential Delivery Unit, but at the same time providing oversight in terms of the reporting. As you saw last, we've just produced our report, and that report is shared widely, including with Parliament, so that they are able to hold accountable those MDAs that are not doing their job. And you've seen Parliament doing an incredible job of oversight by calling various MDAs. I think the Public Affairs Committee and the various parliamentary committees have been doing very well in that effect. So essentially what we're doing on our part is to facilitate that mechanism of making sure that there's follow through with what we've put in the first 10-year implementation plan to be operationalized.
Representatives of one of the country's high street banks, NBS, have indicated that the institution is expected to switch its core banking system to FlexCube from the current T24 later this month. This came out during a press briefing the bank held in Blantyre on Monday. NBS Head of Strategy, Products and Marketing, IQ Zolemari, explains.
So yes, indeed, we are transforming and beginning with the change of our core banking system from what we used to do before, which was the T24, transitioning into FlexCube that we'll be using as our core banking system going forward. All right, so FlexCube has got a lot more advantages that we have currently. First of all, let's begin with the fact that it's the latest technology on the market, and that's what we're moving to. Number one. Number two, if I'm to break down the product, it would take all day for me to explain each and every one of them. But then what we will do is, once we transition, we will now update our customers on the products that we're plugging it in. Because remember, this is just the first step. It's like building a house, so we start with a foundation. So now we are putting the foundation, which is the FlexCube, and then whatever we build, whatever pillars and columns we build up, we will also keep you posted and inform you of the same. As a bank, we want to achieve what we've always achieved. As your caring bank, our priority is always to make sure that we care for your banking needs and we deliver those needs according to what you as the customer actually require. So this change is just a first step into us building that relationship again. As you are aware, we are celebrating 60 years of banking here in Malawi as NBS Bank. So hence we're saying Tilirimodzi as we move on to the next 60 years. Tilirimodzi, and how do we begin that? By giving you this state-of-the-art system as a building block towards our excellency journey. There's a lot of issues for the decision to come from our board and our management. So some of the issues are the cybersecurity issues that were mentioned earlier on. So we need to be ahead of our game at all times. So there's a lot of issues that led to this decision, but I can guarantee you that all of it, it's in the best interest of the customer. To begin with, we have thought this whole process through, and I'm sure you can agree with me that you haven't had an engagement like this in the past, where a bank is explaining to you what they're trying to do with the core banking system change. That in its own should tell you how prepared we are. because we are not mincing any words about the readiness of the same. We are going through the process with a lot of detail to make sure that at the end of the day, our customer is not inconvenienced. At the end of the day, there's no blackout of information to our customer, which is why the first people that we wanted to talk to were you, the reporters, because you are the people that connect us to the rest of the people. And we wanted you to get the information from us, the correct information, so that when you're sharing that information, our customers are not left behind. The biggest benefit that the customers will get is the flexibility to begin with. I did mention about the Flex Cube. The name itself already explains a lot. So the flexibility in how we do banking business, because you can agree with me, my needs are different from your needs and another customer's needs. Every customer has got specific needs. Just by the mere fact of having a system that can allow us to customize every customer's banking experience, that in its own is already the biggest benefit, because what you value and what another customer values are different. So we want to be able to have a system that will allow us to let every customer be appreciated according to their banking needs.
With that item, we've come to the end of today's edition of Business Time. It is a magazine program where we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, I am Chimwemwe Mangazi. But always remember, if it doesn't make money, it doesn't make sense.